Sound check. Sound check. Okay. I think we're good. See. Sound check. I think we're good. All right, guys. GM. I hope everyone is good. And yep. So I'm here to do a market review, guys. I'm reviewing my model, and obviously we need to rectify the mistakes that we made earlier today. And well, I was pretty confident in my trade earlier on, but I was offside, guys. I was offside, and it was a tricky day. Don't want to lie. It could have been, obviously the losses could have been minimized. But I guess I over trusted my model on a bad day. All right, so let's dive right into it. So going into today's trading, I'm gonna say today because we are pretty much still uh well, New York time wise, it's still the 20th, but in my country it's now the 21st in the morning. Excuse me, guys. So I'm just gonna refer to this day as today, okay? As the 20th as today, even though it's not today in my country. I'm just gonna refer to New York time, okay? So um looking at the hard time frame on my left, we had pretty much a very clear structure, you know. If you look at the build up to my trade, you can clearly see that we had, let me zoom in on this. We had these clean relatively equal highs here, which were obviously going to be my best case terminus right there. And then we had also, before I took the buys, I had these nice relatively equal highs just here, because I took the buys after I had this change in the state of delivery. Now that came after we referred to this fair value gap. So let me just unlock my annotations here so that you guys can see. So if you look at the build up from this swing low going all the way up to that swing high, that creates the relatively equal highs. You can see that we took out that high by a pip or two, but now if you look at the bodies, they are still, you haven't went up to that high, I mean, with the body. So this could still be revisited, because the market refers to these, sees these as gaps, so to speak. So this can still be revisited. That's why we, went all the way up there, right? Still have liquidity here. This is still pretty smooth, it's not that jagged. Now it is jagged now. See how the week went all over, extended. I mean, it went just above these highs, and look at that, displacement, and yeah. So looking into this price leg here and this price leg, so we went all the way up, I would say generated buy side liquidity, and then we retraced all the way back down. Looking at this PC, price respected this PC, look at the bodies, and then we rallied, closed above the opening price right there. That's a change in the state of delivery, that's bullish. Now you can study the discount of this price leg. We had an imbalance right there, which was respected, and we had a change in the state of delivery here. So now I have to align the 1 minute or the smaller time frames with my $1 million model. It can come in a form of a reversal or a continuation. Okay, so trading on a no red folder news Monday. Obviously, this is our roadmap. We have to rely on the macros to give us that displacement and that extra confirmation, because the trades or setups that or entries that are formed during the macro are to be trusted on days like this, because you do not have that red folder news that's going to give us that displacement that we need, or that manipulation that we need, so that we can trust that it's now ready to deliver the opposite, in the opposite direction. Okay, because that's what we trade, right? So going into 7 o'clock, I'm going to now zoom in on this, and it was after we had already opened and traded and closed above this down close candle here. This down close candle is the one that referred to this BC at discount, and then the next 4 hour candle closed above that, confirming a change in the state of delivery. So I was ready to take it to these relatively equal highs. This was my short-term or low-hanging fruit objective, so to speak, going into today's trading. You can see that dotted line here, because we also had made relatively equal highs with that 4 hour with the pre-market range buy side liquidity. Now the pre-market range is what I was willing to trade today because of the no red folder news. Okay, but we can also trade any macro in the day, I mean during the New York AM session, which I trade. All right, but the high probability setups will form during the pre-market. Okay, so I wanted to trade the pre-market, and pre-market is from 7 o'clock all the way to 9:30. That's pre-market. Then from 9:30 going all the way to 12 o'clock, sometimes 11:30, New York AM. Then begins the lunch hour macro. Then after that you have the PM session. All right. So I did not want to trade the lunch hour. I did not want to trade the PM session. I trade the one, my $1 million model. I trade it during. I like to trade it during the New York AM session. But yes, sometimes it will be carried over to the PM session, the framework of it, but I like to execute it during the pre-market. So now let's dive into the 1 minute. I'm going to sync this line in layout so that you have an idea what the 1 hour or 1 minute look like. So this is where this change in the state of delivery occurred, and then this retracement here is basically this candle's week, right? Yeah, which trailed me out, as I was buying in this direction. Now let's go to 15 minutes on this time frame so you can see how deep it went after retracing to that 4 hour opening price. Now, when I was looking at this and on 1 minute here, so we were already here. I'm just gonna go to 1 minute for now, and we're going to scroll all the way back. Now remember, this is the 4 hour. I'm gonna remove this line because I don't want to, confuse you guys with it, and I'm just gonna, okay. So this is where the change in the state of delivery was, and this is the same fair value gap here on 15 minutes. Okay, so I'm now gonna remove this, and so that we have this clean structure here on the 1 minute. Okay, so if you study the $1 million model, you have to study or pay attention, very close attention, to the first 30 minutes of the pre-market, 7 o'clock going to 7:30. If you zoom in on here, it's going to tell you what you should expect later on, like maybe could be after 8:30 or um after 9:30. All right, so when we opened here at 7 o'clock, we swept the 7 o'clock low, which gave me an idea of, okay, I should anticipate what, a continuation, because after the sweep, price came back to this order block right there, and then it rallied. Now this is a good sign. This is a strong signature telling me that we are bullish. Now I have to study the 15-minute fair value gap and find the discount of the pre-market and trade the continuation if I say this. So if you know the model, then you know what I'm talking about. Okay, so I did exactly that. So when 8:30 approached, I had already seen that we've already formed relatively equal highs with the 4 hour highs, the 4 hour buy side relatively equal highs. This was forming relatively equal to that high on 4 hour, right? So that was a clean draw to me. I just needed 8:30 to retrace back into discount of this, fill that 15-minute fair value gap, which it did, and then go long from there. Now, 8:30 does what? It opens somewhere here inside the 15-minute fair value gap, right? It opens right, excuse me, it opens right here, and then it does what? It gives me the confirmation that I need, right? Okay, I actually waited until the macro time, 8:45 going into 8:50, right? Because we trade the macros. So we take out this low here one more time, with the bodies closing below that. And then we have this three drivers pattern. We have the swing low, one, two, three. And then when we did this change in the state of delivery here, I waited for this and I went short as we closed above the 8:30 opening price right there. I mean, sorry, I went long, not short. So I went long right there because why? The first 30 minutes is telling me continuation, right? We are inside the 15-minute fair value gap at discount of the pre-market, and I go long right there. Okay, and then it becomes a loss. Now, when this loss formed on 1 hour, we had formed a BC. Okay, this was a BC because when I got into this trade, this was the candle that was printing then. Okay, so I was looking at this inversion, I was thinking maybe it's gonna push it to this high, take out these highs, then retrace back to the 1 hour fair value gap that's gonna form, and it will come back later to it. But as soon as it took me out here, I said, okay, let me wait for 9:30 and wait for the next macro. And the first presented fair value gap here, I watch it because on 5 minutes, um, this is what I wanted to see, right? So on 5 minutes, this was when we were feeling that 15-minute fair value gap, right? This is the 15-minute fair value gap. On 5 minutes, I wanted to see a bullish change in the state of delivery above this high. So when we got that at, sorry, we already closed above the 5 minutes when I went in for the first time, sorry. Then after 9:30 it was here. I wanted to see it invalidate this fair value gap and close bullish here so I can go long again. And guess what? We respect this fair value gap right here, the first presented. We go up and then we sweep it, and as soon as after sweeping this after 9:30, we close bullish, and that was the confirmation also on 5 minutes. That's why I went long, thinking it's now ready, and boom, one more time. And then when it did this, I was no longer there, guys. So those are the losses I took. And now looking back to it, why did this not become a continuation as I was anticipating? Okay, we clearly had smooth edges just before my opening at 7:30, which is normally not a problem, you know. So if you look at the opening here at 7 o'clock, we opened and we formed very smooth edges here, relatively equal height. And this is an original consolidation type of a thing. And then you can anticipate, obviously, the original consolidation to be swept before the true rally. And also the rally came after just that sweep. Let me zoom in on 1 minute so I can show you exactly what transpired here. Now we had this, let me go to 2 minutes so that you guys can see this properly. Okay, we had this sweep at 430, took out that low, that's the run higher, and then at discount we had smooth edges of the whole entire range, right? So these are discount relatively equal lows. Let me do this. Okay, discount relatively equal lows. Smooth areas are meant to be made jagged. Now, if you study this, the body of this candle that sweeps the 7 o'clock low, let's go back to 1 minute. In fact, sorry guys, I want you guys to see this. I am looking at the week here. The body remained above that 7 o'clock low, right? The body of this week remains above this body, which makes it we could still revisit it, because if you remove the weeks here, majority of the volume did not sweep that low. So it is kind of a like even these lows, yeah, from 7 o'clock, because this, don't pay attention to this. We're paying attention to the low from 7 o'clock going into um 8:30 or 9:30. Okay, this does not matter that much when you're trading my $1 million model. But if you look at the wicks here, the body did not bump this low, so we still have relatively equal lows technically. If you're looking at like an advanced version of the market structure, so that's the only way I understand, or that's the only way um like that's the only explanation I can take from this loss. That okay, I did not pay attention to that body of the candle, not sweeping that. That's why after the first loss here, because I do not regret taking the first trade, I would still take it even tomorrow. It was proper, but I'll have to check this guy here so that if I lose it, if I lose the first trade, I know the second bullet will come only after we take out the relatively equal lows here. Even if the body, just the body crosses these relatively equal lows here, then I can start hunting the next macro that comes after the confirmation of a bullish structure, which in this case I like to check it on the 2 minutes, because that's where the structure is pretty much visible, and I like the structure more on the 2 minute time frame. So I'm gonna zoom in on this 2 minutes, and after we bumped those lows, price went as far as taking out everything, even that low inside this inversion, and then before it rallied to give that bullish market structure shift here. At discount we had an imbalance, and at the right time we revisited that imbalance at discount, and again we rallied. So obviously we are trading the macros, so you can see that the run that took us to these highs was formed not just outside any random time, but it was formed during the specific time window, which was the macro. So the only thing I accept here is the body not crossing that. But even if I were to trade tomorrow, even if I don't see the body, I'll still execute, because my risk management allows for me to take at least 2 losses a day, and I'm still good. So the first one, I'll put it back in until I see it continuously repeat like this, and I have the confidence in the data to say, hey, if it's like that, then don't be too harsh on the continuation, and don't just execute blindly that continuation. And then here, it was just because I was still convinced that it's a continuation. Otherwise, I would have just waited for this sweep at discount and then wait for the next macro that comes, or the confirmation, because structure has to match the roadmap, which is the calendar, right? So the structure was now bullish after we took out these lows, but the roadmap says macros, so we wait for the macros. Okay, so that's exactly what happened here. The model delivered, but it was just offside, and it's human error, guys. We all make such mistakes. I'm just happy that my model keeps delivering even when I'm offside. I'm able to then come back later for a review to see that this is where I got it wrong, and I'm able to then grow as a trader, and also just to cement this knowledge of this model. So a very insightful day, even though the losses are never nice, guys, but losses are not losses are lessons to me. So I'm excited about this new lesson, and from tomorrow I'm going to be paying more attention to it, and I'll be enjoying the model. Okay, let's go to gold, and um go just a very short review on it also. So gold, if you look at the 1 minute, obviously we are trading the pre-market session, but it was too early for me, guys. When I sat down, we were literally retracing to this fair value gap. So we had already put in these relatively equal lows after 7 o'clock, put this high, and then generated sell side liquidity here, and then we bumped the high at 7:30, and then after that we printed a bearish market structure shift, or a change in the state of delivery right there, fair value gap. There was an entry to then take it lower, but it was before the macro, but it's still pre-market, which is quite good. It doesn't necessarily mean that you're going to get a trade during the macro if the structure aligns, because the most important thing is not just wait for time and you place a sell because time says so. The structure has to align. It's the same thing. Sometimes you'd see me referring to the lunch hour, uh, saying it's from 12 to half past 1. Sometimes it's going to be 11:30 to half past 1. That's actually the whole time window. That's 2 hour period from 11:30 to half past 1 p.m. New York time. That's your lunch hour window. But you have to study the structure. When did the reversal start? So that you can get the high and the low, the highest high and the lowest low of that, so if you want to trade the PM session. Okay, so it's basically about structure, but you have to anticipate that during that time it can form. Okay, so the algo is not it is specific, and if you align everything accordingly, then you swim with the big sharks, the smart money guys. All right, so here this was the entry. I was not really, because I had just been like on my screens for a few minutes. I can't just open the screen, see this, and say, okay, it's ready to go low and make a shot. So I had to wait and get a feel of price, and obviously, before I could, do anything, we'd already swept these lows. Fine by me. And then when price was stuck here, I was like, okay, this is it. Even though I like these relatively equal lows here, London lows, and the new week opening gap low, completely feeling it. I was like, okay, I don't like how it started moving sideways here, and I was like watching, and then before I knew it, I was already on Bitcoin by the time we took out the London lows, and then we continued to move sideways. Very, very bad price action on gold today. If I don't know if people traded this, but it was just bad, and you know why. We do not have red for the news, and the macros delivered. Even this move here going lower, it was macro time. This is like the 950 candle that you see me, if I want to have a tight stop loss and I see a sweep like this. So basically here you see that we took out these relatively equal highs here, and then we rejected the new week opening gap high, and this was inside the 15-minute, the first time we traded to the 15-minute. Okay, CB after 9:30 we rejected right there before we took out the London lows right here. So that's the second trade, the continuation lower, because you don't expect price to go above this. Now we took out the relatively equal highs pre-market and that high, and look at the displacement. It's going to take a really significant push to go above this high, and already you can see that this fair value gap here, which was my I was using it to gauge price, just to see where exactly does it want to go, because could have used this as a reclaimed, but as soon as we closed below it right there, I knew that this retracement was just a retracement and the continuation was coming just at least to these relatively equal lows here. But it went as far as taking out the London lows, and then from there retraced back inside the 15-minute, and it was just stuck there for you know extended amount of time. I did not trade this, guys, and I do not regret not trading it, because I could see that it was very slow for my liking, and the only move was this move here after that 9:30 change in the state of delivery, that rejection at 9:50, and then obviously I was going to trade. Once we close below that candle, I was going to find something, an order block, use this as my strong, as my tight stop loss, because I trust the 850 rejections. 950 rejections, 850 rejections, 1050 rejections, or even like those specific ones. I like them because that's the time window. 750 rejections, I trust them. And then just target these London lows. That was going to be my trade basically. That's the only trade I could have taken today, besides this one, because I was already late for this one. I wanted to see. I'm now going. I think this whole week I'm going to be sitting down very early on gold because of this such things. This is what's going to happen the whole week, because you don't have any road for the news event the whole week pretty much. So tomorrow, Tuesday, I'm gonna be here. Just I think maybe just before 7:30, I'll be already sitting down and scouting. But if maybe I'm not gonna trade gold, then Bitcoin can deliver even after 9:30, like how it did today. But during the macro, I'll be sitting down and reviewing that. So guys, I hope this was insightful. And if you've got some questions, leave them in the comments. I'm reading the chat as we speak, and also we can continue the chat on Discord. My Discord is free, so pull up, let's learn together. Hope this was insightful, guys, and I will see you guys on Discord. Cheers.